After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor.
And there you go. There's the chairman of the Federal Reserve, Jay Powell, on his future at the Fed. That was the big news out of the meeting yesterday, that he will stay on as a governor after stepping down as chairman. The 10-year yield this morning down 3 1/3 basis points after Powell left interest rates unchanged and said this about the state of the economy. Watch this.
It's actually quite resilient. Growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better.
Meanwhile, Kevin Warsh cleared a key hurdle to lead the Fed. The Senate Banking Committee voting to send his nomination for a full vote in the coming weeks. And, of course, the Senate is on recess next week, the week of May 4th. So the vote will likely be the week of May 11th. Joining me now is Wall Street Journal's chief economics correspondent, Nick Timiraos. Nick, great to see you. Thank you so much for being here. Let's talk about what you heard out of the meeting yesterday. Was the headline for you the same as for us, and that is that Jay Powell stays as a governor? How long will that last?
Well, Maria, thanks for having me. Yeah, that was the news yesterday. It was a momentous meeting, and, you know, it wasn't really expected to be. We thought we were going to get a quiet meeting with no rate change. Instead, you get 4 dissents on the policy statement, 1 against the decision Stephen Myron wanted to cut, 3 Fed presidents who don't want to signal rate cuts anymore in the language that they put out in that statement. That hasn't happened since 1992. Then Jay Powell walks into that press conference and says he's not planning to leave when his term as chair ends in 2 weeks. That hasn't happened, Maria, since 1948. So yeah, it was a big day, and there is a lot to unpack right now about the Fed that Kevin Warsh will inherit when he becomes the Fed chair next month.
Yeah, I mean, is Jay Powell going to be looking over Kevin Warsh's shoulder the whole time, being a governor? He said he was going to be low key. Was that? I was wondering if that was supposed to be facetious. I mean, let's face it. I mean, the Senate is on recess next week, but you're going to have a confirmation of Kevin Warsh to lead the Fed by May 11th, and that just in time to start on May 16th or May 15th, right?
Yeah, so Powell did say yesterday he doesn't imagine himself being a high-profile dissident or anything like that. I think that Powell has sort of he has a mild delivery. He sometimes presents as meek, and that can get interpreted as he's a pushover. And I think what we've seen over the last year is that he's not, and he cares a lot about the Fed being able to operate the way he thinks it needs to do whatever it has to do to keep inflation down. You think about 4 years ago, the Fed was doing 75 basis point hikes at consecutive meetings. And so the concern he described yesterday was that the erosion of the norms around the Fed, the criminal probe of the Fed, firing a Fed governor without strong for-cause evidence, as those norms have been eroded, he feels he has no choice now but to kind of set other norms aside, including the one that the Fed chair normally steps down. The law allows him to stay for another year and a half or so, Maria. So, if norms go away, all the Fed really has to defend its autonomy is the law.
Yeah, but I mean, I would push back on that. I mean, you talk about norms. How normal is it for Jay Powell to put DEI policies and climate change policies in at the Fed? I mean, and that's what Jay Powell did under Joe Biden. I mean, there were lots of climate, mandates and things like that throughout business. And I think it also hit the Fed, too. So you're going to talk about norms. I found that abnormal. But look, I want to talk about the priorities of Kevin Warsh from your standpoint, Nick. Do you think it's going to be a priority more so to cut down the Fed balance sheet? Or do you think it will be more of a focus in terms of moving on interest rates, perhaps cutting interest rates later on in the year?
Well, I think as you saw yesterday, Maria, it's going to be harder to get this committee to cut interest rates right now. It seems more likely the discussion is moving towards whether the Fed would need to raise interest rates, even though there isn't support to do that right now. But I think the point, Maria, you raised about climate and DEI and some of these non-monetary policy issues is important, and it ties directly into what Kevin Warsh said last week at his confirmation hearing, because he said that he's going to support Fed independence around monetary policy, but he does not make a claim that it should extend to bank regulation or international finance or other areas where he said the Treasury Department and the administration should have the right to decide those things. And I think that's where this tension comes in. What if you end up with an administration that says, well, we want you to do these things. We want you to do these things on banks like climate. We want you to focus on these things. They're not monetary policy. The standard that Kevin Warsh laid out last week, this narrower defense of where the Fed should operate, it creates a real tension there, Maria.
Yeah, and I like that. That's right. And, that's why, you've got people who oversee those things like Mickey Bowman. And she has her proposals on Basel and on the end game there and on capital. So that's also important. But look, I love what you heard from Jay Powell about the broader economy. And I want to get your take, Nick. You've been a student of this for a lot of years at this point. How does the economy feel to you? I mean, look at what he just said. Even in the face of 4 dissents at the Fed when they leave rates unchanged, where he's saying he's going to be around, sticking around on the board as a governor, he has to admit the resiliency of this economy, that consumer spending is just plowing forward despite the spike in oil, despite the spike in gasoline, productivity on fire. How do you see it, Nick?
Yeah, and these are all reasons, Maria, why I think it is going to be harder to get interest rate cuts, because the Fed is worried right now that when you have these supply shocks, last year we saw tariffs, we're seeing goods prices go up. Normally, goods inflation in the United States for the last 30 years has been flat. And so when you have goods inflation, the Fed is going to worry, well, are businesses learning now that they can push along price increases, that they have pricing power that they didn't have 10 years ago. And now you layer on top of that this energy price increase. And so more businesses, if they're testing the ability of their customers to pay those higher prices, and the economy is strong enough where people say, well, I'm just going to pay for this because I do have a job, my income's growing. That's where you're going to get into a tension maybe later this year, not right now, at the Fed over, well, did we cut interest rates too much? Is policy actually slowing down the economy when inflation is above our target?
Well, I'll tell you, this spending is just, monster spending, right? Ryan Payne, jump in here. Big tech delivering strong quarterly results again. But spending is the story here. Microsoft, Amazon, Alphabet, Meta, all beating on revenue powered by cloud and AI. We're looking at the CapEx numbers this morning, and take a look at these numbers. AI spending expected to top $650 billion this year. Alphabet was the standout. The stock this morning is up better than 7% right now on strong cloud growth and AI investments driving revenue. Microsoft's AI business running at a $37 billion annual pace. Heavy spending there is pressuring the stock this morning. Amazon benefiting from cloud demand, AI partnerships driving growth at AWS, and Meta is under pressure. Despite the strong numbers, it raised CapEx guidance to $145 billion this year. Ryan, this is what I'm talking about when I'm talking about this massive productivity in this economy. And by the way, the data centers aren't even built yet. This has legs here. This spending has legs. I don't know what it's going to do to the stocks because I don't know, in terms of what's appropriate. But what's your take on all this spending, Ryan?
I mean, the only word I can think of is awesome, Maria. You hit the nail on the head here. I mean, the sales numbers were insane. You look at Google, up literally 81% year over year in net income growth. That's like astronomical. And that's even with just the huge spending number, which I actually have at like $670 billion now because they've all increased their CapEx spending. So I think what you're seeing here is tech is back in the party, right? At the beginning of the year, you saw tech languishing. That's up over 20% now for the year.
Yeah.
So you've got this broad booming bull market. The market's telling you the economy's heating up. Be bullish.
Nick Timiraos, how does this spending fit into your thoughts on the macro story?
Well, people like to talk, Maria, about the 1990s, and I think there are, it's an interesting cousin to what we're going through right now. The Treasury Secretary, Scott Bessent, and Kevin Warsh have talked about how Alan Greenspan did not raise interest rates when his colleagues, thought he should in 1996, 1997. He said, look, we're getting this productivity boom. We don't have to do that. And he was right. The flip side of that, though, when you think about all this spending, tech boom right now, 1999, 2000, Alan Greenspan raised interest rates about 2 points in a 12-month period, ended the tech stock bubble. And so, I think that's going to be the question now is how does the economy handle all of this spending?
Yeah, I like that. I like that, looking back to .com and what Greenspan said. That was great. Nick, good to see you as always. Come back soon.
Thanks for having me, Maria.
Nick Timiraos. We'll be right back. Stay with us.